So the topic here today is innovation, and innovation is a topic that it's hard to overstate in terms of its importance to this industry, right? Our industry is about managing risk, and risk itself is constantly changing. It's becoming more complex. It's becoming more interconnected. And it's really about innovation. Innovation is really what is needed to keep pace with the changing nature of risk and make sure that this industry continues to have relevance for its customers. And yet, innovation is very challenging, right? So we polled 200 of our client CEOs, and 80% of these CEOs said that innovation was actually a top 3 priority for them. And yet it's very difficult. So only 10% said that they've been satisfied with the rate of progress and their track record of innovation. So together with our panel here, we're going to look at innovation through a few different lenses: where we've been, where we are today, and then where we might go in the future, and what are the most compelling future opportunities for us as we think about innovation in this market. I'll invite my panelists now to introduce themselves. Ed?
Sure, thanks Shannon, and thank you to the GIF for having me back. I'm from HSBC. It's a small bank which has roughly $3 trillion of assets, operates in 80 countries, and is, according to FSB, the second most globally systematic, important finance institution on earth after JP Morgan. I'm responsible for their insurance operations. We have life and health companies around the world, predominantly in Asia. We're the leading insurer in Hong Kong, and we're a top 10 player in mainland China, Singapore, Macau, India, and others. And obviously, as a large, complex organization, innovation is something that we historically haven't done particularly well. So I'm here as much to osmose and learn as I am to discharge.
Yeah, good morning, everyone. Andrew Robinson, I'm the chairman and CEO of Skyward Specialty Insurance. We are about a $2 billion, principally U.S.-focused specialty property and casualty company. Interesting story around us. We are a 17-year-old company. When I joined about 5 years ago, we did a complete reboot of the company, including the name. And a big part of that reboot was really our strategy, which put technology at the forefront. And as we go through the discussion here, I'll be able to give you some examples of things that we've done that are what I would consider to be very innovative in the context of commercial property and casualty.
Hi, I'm Tim Rosar with RGA Reinsurance, a global life and health reinsurance company based in the U.S., currently serving as Chief Innovation and Content Officer, so oversees strategy, innovation, marketing, communications, things like that. I guess perhaps of interest, about 10 years ago, I was also the first employee and CEO of RGAX, which is our insurtech and insurance accelerator. So I have some experience working in the innovation space directly with startups. And then also, as of a couple of weeks ago now, immediate past president of the Society of Actuaries. So there is not any incongruity between actuaries and innovation. So I'll try to put those rumors to rest today.
All right, and good morning, everyone. I'm Taryn Terrell. I lead enterprise incubation at Liberty Mutual's Innovation Lab. And as part of that role, so we work really closely across Liberty Mutual, across their different businesses, to spin up new concepts, bring them to market, and help them scale. So really excited to be here today.
Excellent. All right, well, we're going to tick through a few different questions, but we also will take some questions from the audience here. And I think we have 2 different options. We've got a digital and an analog option. One option is to submit your questions through the app, and then the second is you can come to the microphones and share your questions there. So we'll start with, Ed, with one question that we'll kick off here with. Insurance often gets a bad rap. There's a lot of misconception out there about just how innovative the insurance industry really is. Help us dispel that misconception. What do you think as you look back? We'll rewind the clock here a bit here, but as you look back, what are some of the more substantial innovations that you think this industry should take credit for and be quite proud of?
Okay, yeah, thanks, Sean. Honestly, I think it's a mixed bag, right? We had your colleague from McKinsey on Sunday telling us that we were, as an industry, increasingly less relevant. due to a failure to adapt and evolve. And I think, glass half empty, I think he's right? If I look at my business, life and health, and I measure the consequence of innovation, right? For me, very simply, that means you're either making your products and services better value, i.e. you're shifting the demand curve out, or you're reducing the supply curve, making it cheaper, more affordable, or you're increasing accessibility of your products and services. Have we done that as an industry in the past 10, 20 years? I'm not so sure, right? Ultimately, we serve four purposes in life and health, right? Very, very simply. We serve against the risk of dying too young, and not being able to provide for your loved ones. I think pretty much around the world, our products and services haven't evolved at all. And the scale of kind of term insurance around the world is significantly smaller than it was 10, 15 years ago. Need number two, we serve against the risk of getting sick or impaired and decreasing your earnings capability. Have we innovated there? Again, I'm not so sure. I remember going to an Association of British Insurers summit 10 years ago where an actuary, no offense, stood on stage and said, we've innovated. We used to have 121 illnesses covered. We now have 125. And I'm not sure that's innovation, right? But on the glass half full side, the other two needs that we serve for in our industry are the risk of living too long, i.e. running out of money in old age, so retirement saving. I think there you have seen substantial innovation, largely from the influx of private capital and alternative asset classes, where illiquidity risk premium has resulted in significant gains for policyholders and for shareholders. So I think you have seen innovation there on the life side. And the fourth need that we serve for, of course, is the risk of being hospitalized and paying medical bills. And there, especially where I come from in Asia, I think you've seen a transformation of the industry as telemedicine has become completely widespread. My business in Hong Kong, we pay 1 million medical claims a year, right? There's only 7 million people in Hong Kong, which gives you a sense of kind of how accessible that capability is now. That is a genuine innovation, which coupled with all of the data and analytics and the technology provision to enable matching with doctors is, I think that is probably the best example that we should be proud of and that we should look to do more.
Thank you. Andrew?
Yeah, I think, from a property casualty perspective, I'm a little bit more dour in terms of innovation. I just don't believe that structurally there's been a great deal. I mean, if you think about at the fundamentals, what should our industry be doing in addition to insuring in the case of loss is obviously eliminating loss. And, there's certainly examples in nearly any category that you could point to, but as an industry, certainly we've grabbed a hold of, technologies that are being developed in adjacent industries. So obviously within cars, they're much smarter. You have, a bunch of information that's available to the drivers related to unsafe practices, but it isn't as if, the industry, took that technology and basically used that as the mechanism to fundamentally remake a product. On the other hand, by the way, I was just listening, for those of you who listened to the Roadzen presentation yesterday, right? I believe the fellow who presented the company talked about 50% of all accidents are distracted driving. Well, distracted driving is basically like put your phone down, right? So there's a basic sort of social cost. And of course, our industry still today, nobody basically says, hey, listen, if you are using your phone while you're driving, you do not have coverage, right? That would be pretty severe. And if somebody led with that, I'm sure there would be a whole bunch of other companies who would view that as an opening as opposed to we're going to draft behind that in terms of fundamentally changing practices. So, look, when we get into sort of the next set of questions, I'll certainly provide great examples of innovation, but I don't think our industry does such a great job.
Yeah, I think I agree it's a mixed bag. I do think there's a continuum when you think about what innovation is because, to Ed's example, going from 100, now I'm speaking as an actuary, going from 121 to 125 is at some basic level innovation. It's continuous improvement, evolution, and somebody had to do some research and some work and they're trying to advance a product in the best interest of the consumer at an affordable price. But of course, in the grand scheme of what we think about innovation, when we think disruptive innovation, when we think new emerging technologies, when we think about completely reimagining what the nature of insurance looks like it seems, like a grain of sand on the beach. I think that's the challenge that the industry has the most, is really looking past the how do I improve the next 6 months, the next 12 months in terms of product, in terms of incremental efficiency, and how do I actually transform and reinvent what we're trying to deliver fundamentally, the 4 things that Ed talked about, protection for individuals, whether that's mortality, morbidity, longevity, or property and casualty. And I think that is a challenge. And I think it's maybe not hardwired or ingrained into the DNA of our core business in terms of how we think about it, because it's always about how do I deliver next month a little bit better than I did this month. And I think that sort of comes to the point of how do you innovate, and I think it is about being very intentional and trying to challenge some of those existing paradigms or maxims that we hold dear.
Yeah, I'll say, I agree with Tim. I think, and my background, I actually came external to insurance about 7 years ago, and I worked in consumer packaged goods. And I'll say, I think innovation in this industry is hard because by nature of what we do, we are very risk averse, right? Because we are all about managing that risk. And so when you think about innovation, sometimes it can be hard to move really quickly. But I do think, if I take a step back and I look, I do think there's kind of this overarching trend of technology and really how it's helping us to disrupt key areas of our business. So I think about things like telematics, for example, and I think about pricing. And now we know so much more about drivers in terms of how they're driving, how much they're driving. Is it easy to get to that solution? No. And does it take time? But the spark is there. Similar with aerial imagery, I think about, now we know so much more about the properties that we're insuring. And not only that, now we don't have to send out people to actually get up on roofs and be looking at things. So I think there's been innovation in that space that I think is very promising for our industry. And now I even look at things like Gen AI. We've been doing a lot of experimentation with that within the company. And I just think there's huge potential to drive operational efficiencies internally that will help us sort of maintain the availability and affordability of our products.
Thank you. And Tara, we'll stay with you. Going from looking back to more where we are today and where you see the momentum right now, the innovation momentum right now. So you mentioned telematics, you mentioned aerial imaging. In your seat, you see the full breadth of P&C, personal lines through to large corporate, reinsurance, et cetera. Where do you see the most momentum right now as far as innovation?
Yeah, I think obviously Gen AI is the huge topic. It's been the buzzword for a couple of years, and I think there's a lot being written, a lot of experimentation happening. And I'll say, I think internally at Liberty, we've been doing a lot to think about how do you leverage technologies like these to really help drive operational efficiencies within the business. And obviously there's a lot of risks and we need to be careful about what we're putting out in front of customers. But I think even internally, we're seeing just huge potential. Like I look at things, say for underwriting, our underwriters spend tons and tons of time taking in all of this information, summarizing it, making recommendations based on that. And I just think there's huge potential to leverage some of these technologies to streamline a lot of that work, which frees our underwriters up to be devoting their time to more complex tasks. And I definitely think there's a cost savings benefit associated with all of that. And so I think about that in terms of, we've been looking at areas like underwriting. I think claims is another area that's really ripe for disruption with some of these new technologies, as well as some home office productivity. So, taking sort of your classic insurance value chain aside and thinking about things like our communications, thinking about even, I look at we have all these teams across the company doing competitive intel. There's a lot of tasks that we can streamline and automate with some of these new technologies.
Tim, what about yourself in terms of RGA or just in your space that you see where the momentum is right now?
Yeah, I think in the life and health space, obviously, there's been a big focus on underwriting efficiency. And I think a lot of that work is very good because it's focused on the customer experience. So trying to, accelerate the time from initial interest in a policy all the way to when the policy is actually delivered. Because over history, obviously, that's been a very long process involving blood draws and lots of back office analysis. And I think the acceleration of underwriting through data, through digital, through algorithms, it's been a continuous effort, and I think we're actually starting to see real momentum there in a lot of markets, not just at low face amount simplified issue, but really expanding that into more complex products and liabilities, which is obviously good for the policyholder. It's also good for the entire value chain in terms of being able to deliver that. So there's a lot of focus there with data analytics. I think when you think about what is the role of generative AI or more advanced artificial intelligence type techniques on the specificity of those algorithms, I think that is a continued positive development towards that. We could talk about some of the challenges that introduces as well, but certainly that's been the primary focus right now.
All right, so I have a very different view here, which is, sure, we're probably figuring out how to use tools to improve operational efficiencies, but products aren't getting better, costs aren't getting cheaper. In fact, who here has had a reduction in their home or auto costs within the last 3 years? Raise your hand. One. Two, okay. You must be living somewhere where I don't know. So, look, the truth is that's all very interesting. Like, hey, listen, if you can do a remote evaluation of damage to a home, interior or exterior, I'm sure that will make the claims adjusting process faster, cheaper, maybe a better experience if it's delivered the right way. But the reality is that the underlying product, right? Am I doing things to eliminate loss? Am I delivering product at a fundamentally different price? The answer is no. Within commercial P&C, where I operate, you have structurally a 30 to 35% expense ratio. Just think about that. $1 of premium, more than a third of it basically goes to, like the folks that are sitting up on the stage or distributors and so forth. None of that really makes sense. So I would argue that most of the real innovation is invisible, but it's not to say that good things aren't happening. I will give one, I do think that there's a difference between kind of what the market will accept overall versus what very specific micro markets will accept. And I'm going to give you a great example. When I arrived at what then was a company called HIG, Houston International Insurance Group, we had a business supporting automotive dealerships, which is quite honestly just an awful business. I mean, it's a terrible place. So you think about just hailstorms and large yards of cars, right? That can just end up real bad. And also the people that were involved with weren't good people. So the experience was terrible, but there was $1 billion of experience that we had. So come sort of a couple years later as Skyward, we relaunched a captive so that any of the automotive dealers who would participate, were putting basically their own cost of risk on the line, right? So they were bearing a meaningful portion of the losses. But we did it with some really interesting technology. So we partnered with a company called Understory Weather. It's on-the-ground weather stations that are far more accurate than anything you get from NOAA and the LiDAR and radar information. Effectively, if you think about like a hailstorm, being able to know sort of the size of the hail, the angle, the speed, and be able to do that with incredible accuracy before, after, and so forth. And that's just sort of one example of the kind of information you have. So every single participant in this program basically uses this technology. So Milton, we had $400 million of exposure sitting about 3 miles off the coast in Bradenton. Not only did we, of course, have a good view as to the severity of the storm surge and everything else, but importantly, as that inventory was moved, and if you followed that storm, there was a tremendous amount of inland rainfall and flooding. Yet, we had a very clear point of view about what that flooding would look like, what kind of, what level, sort of above sea level you needed to get the cars to, how far we wanted to drive them away from the storm, and had 0 losses. And so here's an example where we have automotive dealers, and by the way, not all automotive dealers think in these terms, but we've been able to sort of carve off a very substantial portion of the folks who really care, implement technology that allows them to risk manage in ways that they absolutely could not. And the live case example, just with Milton, And being able to move $400 million of inventory to a place where they had zero losses is a great example of the kind of benefits that you can realize. And to me, that's closer to real innovation. Like, that's thinking differently. None of that was necessarily coming from in the industry, but it was the industry, in our case, Skyward, that pieced these different components together, and then obviously through our distribution partners, able to act towards those automotive dealers that are really interested in controlling their cost of risk.
Yeah, I'm kind of on the same page as Andrew on this. Right? I think there's a lot of activity happening. There's a lot of innovation happening, sort of under the surface. I'm just not sure it's broken through yet to deliver a step change in customer outcomes, right? I'll give you an example in our business, right? So in Singapore, for example, I mean, we've pre-underwritten the entire population for individual medical insurance, right? And we can do that because we sit on massive amount of credit card data, which is a phenomenal proxy for moral hazard. And we've got very large group medical and EB business there, which gives us, again, very, very strong proxies for claims utilization and expenses and inflation, et cetera. So I have the entire population of Singapore pre-underwritten, no questions asked, just come to see us, tick this box, sign this thing, and the product is yours, right? So we've built incredible models, wonderful innovation. Everyone's got very excited. How much business have we sold as a result of this? Zero. Right? Because at the end of the day, it still relies on a distribution capability to get the product and service in front of the customer in a compelling way. And we're selling an intangible. We're selling a promise. We're selling a guarantee that requires human interaction. If you look at our distribution, it hasn't changed for 10, 20, 30 years, right? I mean, sure, now my agents have, they have a nice iPad now with pre-populated e-forms rather than carrying around a binder, right? But in reality, nothing's changed, right? And I think unless we really sort of look at distribution, and I'm not sure the extent to which we can, and I think actually for the future of life and health, that's maybe a good thing. It creates a moat around our industry that stops it from being attacked and disrupted. But we really need to look at distribution. And the second piece is we really need to look at risk capacity. Because again, if I can't get the capacity, even in my own firm or externally in reinsurance markets, to write the risks that I am now enabled to write, then nothing will change. I was saying to Tim just outside, right? We have a high net worth business. We write about $5 billion US of sort of whole of life, universal life products around Asia. Ticket size on average is about 20 million, sum assured US, but it goes up to 250, 300 million. We can't get the risk capacity. So whereas I said at the beginning, we've got huge amounts of alternative capital coming in because they want my assets, right? But on the liability side, we're still working with the same reinsurers, with the same treaty structures that we have done for 20 years. And until we start innovating on that side, so the back end and the front end, then I do worry we'll be a little bit like a duck. There's a huge amount of work happening under the water, but just sailing straight as always.
Yeah. And maybe just to stay with that point, what's going to be needed for there to be a breakthrough? Where could the breakthroughs be? And I want you to be a prognosticator a bit here. Where do you think those future breakthroughs will happen?
I think, if I look at the capital side, I think it's going to come from an alternative source of capital or a cheaper cost of capital. A lot of the innovation, I said, we've seen on the asset side in the retirement income space, and the US is probably the best example in the world, has come from a cheaper source of capital, with a regulatory framework which has been permissible on that basis, right? So I think if we need to see that in the mortality and the morbidity space as well to really make a difference, right? That is going to require people coming into our industry with a very different set of frameworks and a very different set of financial appraisals, right? I think as Tyron said earlier, right, getting old companies to suddenly change risk appetite is not easy. So I do think there will come a shock in terms of the capital providers and the capital allocators, right?
Andrew, it looks like you're about to jump in.
Well, first off, it's going to come from a bunch of different places, but look, there is a whole bunch of things that are happening here, at least in the US, but also in other sort of English common law countries that are actually perverse and work against it. So here we are in Florida, which is probably the most absurd regulatory environment for the highest cat-prone exposures in the world. Think about it. You have a government that effectively has a bankrupt structure. It just hasn't gone bankrupt yet. You have undercapitalized companies providing insurance, and all of it is just like a big scheme because you have a problem. The problem is you've got a massive amount of exposure here in one of the peak areas for North Atlantic hurricane. And guess what? The government, instead of trying to figure out how to address it and make it both a market economy, but also create the appropriate structures, has put a bunch of Band-Aids on it, right? And so now that repeats, that's the property side. Here in the United States, it's true on the liability side. We have a tort system that is spiraling out of control and making it, sort of near impossible, no matter what kind of innovation you want to provide. You're in a backdrop where, the cost of loss is no longer something that you can economically provide a product for. And so I do think that, now I'm not a big government person, but there are great lessons learned from around the world. One of the greatest examples is in the crop and agri industry, where you can look to Brazil, Canada, US, China, a number of other countries who have created really thoughtful subsidization programs that are about kind of plus, right? Where effectively what the government has done is they've said, we're going to take the volatility out and we're going to create a product that actually should be interesting to insurers. And I just think that there's more thoughtful roles that government can play without fooling itself about putting bankrupt structures in place that just haven't gone bankrupt yet. They will go bankrupt. I assure you, Florida will go bankrupt at some point in the future on its cat losses. I live in Texas. I think it's another one of those. So I do think that that's a big part of it, and I do think you need that kind of market backdrop. As to the capital point, I think it is probably in the P&C world the one area where there is a really interesting green shoot of innovation. And I do believe at some point, the metadata around risk is going to be good enough that there will be a cleaner flow between the balance sheets that actually can deliver insurance product and how that insurance risk ultimately ends up in the capital markets. And there's more of that's going on today. Recent developments around cyber, which is a digitally native product. Unfortunately, models really aren't good to understand what a tail event looks like for that. But I do think that's actually one of the more interesting places, and as better metadata around risk goes with the risk, I do think that what you're going to see is a lot more risk transferred into the capital markets, and that I think is a great thing, because that really is kind of that's the thing that makes the global GDP go, when you can do those at a very efficient in a very efficient way.
Tim, what are you the most excited about looking forward?
I think I agree with Andrew and Ed on the influx of private capital, increasing efficiency of the entire value chain, the entire delivery of risk. I think when you think about the problem that we're trying to innovate around, insurance, and the original question is the insurance industry innovative? I think, what problem is harder to tackle than uncertainty? I mean, fundamentally, what we're trying to do is mitigate the impacts, eliminate the risk, as Andrew was talking about, whatever you can do to manage uncertainty and then get it at an affordable and accessible cost. So I think that challenge itself is pretty inspiring. I think in terms of where the drivers are, one of the things I've been thinking about a lot is just what's the impact of aging going to have, not just on protection and aging demographics and the needs and protection needs we'll have, but on the back office as well, like the talent of the industry. And I think the combination of those two forces, aging demographics on what products are we offering as an industry and how do we underwrite, distribute those products and accept that risk and affordable cost. But also, our existing systems, whether it's distribution, as we've talked about, you've got aging distribution forces, whether it's underwriting, you've got aging back home office underwriting forces. That's going to drive a lot of momentum towards digital channels for distribution, towards algorithmic and data-driven underwriting for risk selection, almost by necessity in order to solve those problems. Now, does it get at the fundamental dynamics that we've talked about on transformation of the industry and the products? I think that's still a big challenge. But in terms of momentum, kind of forcing the industry forward, I think the intersection of technology, data analytics with some of these must respond to forces like aging are going to, by necessity, force the industry to respond.
I think the other piece too that's interesting, because again, it's a really hard problem, and I think there's going to be a lot of pieces that will help. I think another thread that I know we're really excited about is thinking about our role as an insurer beyond just protection and being there when bad things happen, but to actually entering into that prevention space. So it's how can we work with our customers to prevent these bad things from happening in the first place. I think about the hail example, gets me really excited. We had a similar innovation that we piloted in the personal line space, which is obviously convective storm is a huge issue for this industry. I think it was $50 billion in losses in 2023. And a lot of that is driven by hail. What's interesting is, when you talk to customers, they'll say it's a huge pain point because they never know when it's coming. It comes out of nowhere. And at that point, it's too late to do anything about that. So on the personal lines side, one of the things we did is we thought about, okay, well, we're getting all of this real-time information from our weather service providers, so we know when hail is forecasted for a certain area. At the same time, we also have these new technologies, so we have the ability to text our customers in real time. And so one of the things that we piloted was a service where we would text our auto customers and we would say, hail is forecasted for your area, please get to safety, please move your car to safety. And that's one where we saw some really incredible results where we had 44% of the customers were actually moving their cars. And sometimes the thing with hail is it's very unpredictable. And there are times when we would say hail's coming and it didn't come. And they said, you know what, I'm still glad that you told me. And because of that, I actually would recommend you to a friend or to a family member because I appreciate that you're taking care of me. So I think it was really powerful to see prevention is really hard and getting people to take proactive behavior is hard. But when you can do it, I think that can also help us as an industry because you're preventing these risks from happening in the first place.
Taryn, you mentioned that you had some background experience in CPG, and one of the things that we're always thinking about is what can the industry learn from adjacent sectors, different sectors altogether, as a way to think about how do we drive more innovation in insurance. Talk to us about how you're thinking about other sectors as potential sources of inspiration.
Yeah, no, I think it's a great question. And I'll say, coming into the lab, right, with no insurance experience, I think one of the things that I've really tried to bring in, and in the lab we do a lot thinking about design thinking and thinking about how do you really start with the end user, the end customer, starting there, thinking about the pain points that they have, and then thinking about how you can take some of these technologies and actually weave them into that process. So even I think about things like Gen AI, I think about underwriters, right? Starting with the underwriters, really understanding their job, what they're doing every day, what are some of the pain points that they're facing, what's taking them, what takes a ton of time for them to do their jobs, what makes it difficult, and then thinking about, okay, now I can look at the range of solutions out there and I can start to fit those together. So I do think, sort of that starting with the end user, going really deep to understand the needs, and then thinking about how you can weave in different solutions. And of course, at that point, you're going to be thinking about how feasible is it? What is the viability, right? But I think that's definitely something that in the lab, we really try to practice.
Tim?
Yeah, I think the biggest lesson I've learned from working with startups is be careful not to fall in love with a solution, like fall in love with a problem. I was introduced to a founder, actually by a friend of mine from McKinsey, it was probably 9-10 years ago, and he had just sold a business in the banking industry for more money than I'll make in my lifetime, and was interested in insurance. So I'm like, okay, I'll meet the guy. And he was going around talking to people in insurance. And so I met him, and I said, tell me your problem statement. He said, well, and of course this guy was still in his, mid to late 20s, and had already, made a lot of money and brought in his learnings. But he said, my wife and I just had a kid. We wanted to get insurance, and the process was terrible. And we want to help make insurance more affordable and easier to get for young families. I said, okay, clearly articulated problem statement. What's your solution? He said, okay, here's my idea. You know how you have usage-based insurance in auto? We're going to do the same thing on the life side. Every time you're moving around, you'll be covered, and every time you're not, then you won't. Number one cause of death for this age group is accidental. So I said, okay, kind of an interesting idea. Let's talk through some of the problems. I said, you realize that you are sort of incentivizing couch potatoes, right? I mean, you're incentivizing like the person that is sitting around not doing anything, not active, like they're going to get a better deal than the person that's healthy and riding a bike and jogging and so forth. Okay, interesting. I said, well, but talk to a lot of people. Like, I like your idea, I like your passion. About 2 weeks later, I'm in New York again. I text him. I said, oh, I'm in New York. Going to have a coffee? He's like, yeah. And he's completely changed his business plan, completely changed his map, completely updated the app. And now it's an app that's tracking your steps and giving discounts for how many steps you get. And all of a sudden it's a wellness program. And I'm like, that's cool. But he goes, look, the problem is the same. I want the most people I can, to have insurance and make it affordable. That's the problem I'm trying to solve. And he had done market research. He'd put this in front of customers, and he had come to the belief that this was a better way to solve that problem. Like, I am so stubborn. Like, I would have said, this usage-based life insurance, that's my idea, that I'm going to go all in. And maybe there is, a business in that, and somebody will crack that nut. But for him, it was so target-focused on his problem statement. So it just gave me some insight both into how founders think, but also bringing in some insights from outside the traditional insurance industry.
All right, I love this question. And I might actually insult everybody on the stage, so I apologize in advance. So I spent 20 years in strategy consulting, ran a global insurance practice, and I learned a bunch from that I would never repeat as a CEO of a company. I also spent 4 years at a venture capital firm, made a couple of investments, went in and led one of those companies. Liberty Mutual was a big client. Have a lot of scar tissue of trying to sell in insurance technology solutions into large companies. Okay, so Skyward, we're small, we're only $2 billion, but there are a couple sort of core elements of things we will never do, right? We will never set up a separate digital lab, innovation, venture capital group, any of those things. Everything has to happen with our business leaders. There's going to be no distance between innovation and the stuff that happens on the front line. So we use OKRs as our means to sort of set goals for our company. I don't know if folks are familiar with OKRs, but John Doerr, famous venture capitalist, started his career at Intel, came up with this. It's really sort of present and used in the technology industry. We've been using OKRs now for 4 years. We've gotten very good at them. One of our OKRs set up for this year is that every single person in our company will propose a use case for how it is that they're going to use Sky. For us, it's GPT-4. We have a name for it inside our company for how it is that you use a GPT in their job, change their job. Every single person has to do that. That's just an example of the kind of things that we do. But I will tell you that what has happened is that because we have pushed all the innovation right to the businesses and said every one of the business leaders not only need to understand their ecosystems as it relates to technology, they need to tap into the experts. We have a group of people, whether it be prompt engineers or data scientists or data engineers, surrounding our business leaders to help them. And then, the most interesting thing is twice a year, every single person in our company gets together for two 2-hour sessions over 2 days. So this happens twice a year, where the business leaders, it's called Tech Activation, the business leaders present the interesting things that they've done in their business over the course of the last 6 months. And effectively, it becomes a competition amongst the businesses. You're like, so one of our business leaders led very early with, hey, we're going to use GPTs to summarize every submission that comes in. Most of our submissions, because we're really at the complex end of commercial property and casualty, 100 pages long. You get a 2-page narrative that allows your underwriters to really quickly be able to see the risk, right? Well, then suddenly every business leader wants that. Another one of our business leaders said, well, geez, I'm going to go a step further. I'm going to take all of my underwriting guidelines and see if on the 5 sort of key risk vectors that we talk about every one of the risks, I want to see if we can get a GPT to actually give us a view of any submission on these 5 risk vectors. And that was in our healthcare professional liability business. Sure enough, that worked with a high level of fidelity. Now, every single one of our business leaders is rewriting their underwriting guidelines to a level where they can do the exact same thing in their business. And so, and I don't think any of that stuff can happen. This is based on my 20 years of experience in strategy consulting, 10 years in sort of running a very large division in a company, 4 years in venture capital and running a business. I don't believe any of that stuff can happen through innovation labs or any of the things that large companies have. And in fact, if anybody goes and looks at our company, you'll see like this crazy long list of announcements of really interesting innovations that we've launched into the market. And the speed in which we move is very much about the way the company's built. And the challenge for us is, okay, we can do it at $2 billion and 600 people. Can we do it at, $20 billion and 6,000 people? But I'll tell you what, we will make every effort to keep that model sort of be our model for how it is that we're doing this inside the company.
May I'll jump in because I
Sorry
feel like...
if I insulted you.
I just wanted to say, I don't disagree. And I actually think building on that, I'll say, you look at Liberty, like we've gone through many models of innovation. We've had separate innovation labs. We've had separate venture capital funds. We've actually moved more to a model similar to what you said, where now we sit alongside the business. All of our work is actually spun up in conjunction with those business leaders, because I do think you can't operate off in a silo. We can innovate things and bring them back to the business, but then they say, what is this? I didn't ask for this, not invented here. And I think, I totally agree. I think that innovation needs to happen in partnership. So now our model is very much, we sit at the table with our business units, with our leaders, spinning up projects together and working in lockstep to deliver that. So I totally agree with that.
Yeah, even in HSBC, I agree with Andrew and Tara. We used to have innovation labs. We used to have chief innovation officers and various other things. And we don't anymore, right? Because typically what happened was silos got created. And then as soon as rates went down or new leadership came in and said, I need to cut costs, it's the silos that become hobbies, and it's the hobbies that become attacks. So we're similarly on OKRs now, and OKRs are owned by CEOs, right? And that's how we invest, right? I just want to very quickly go back to your point around adjacency, right, and adjacent industries, because I do think this is the answer. Right? Insurance in isolation is meaningless, right? We are an adjacent industry. We have to be attached to an underlying, whether that's a peril, whether that's a trigger or risk or whatever, right? So if we are going to continue to innovate, visualizing the future, we have to identify where those adjacent sectors, industries, innovations are coming from. And again, in my part of the world, in Asia, that's really in 2 ways. One is in medical and in the provision of private healthcare. And frankly, that's because doctors in Asia are the most red-blooded capitalists you'll ever find, and they are there to try and meet as many patients as they possibly can and maximize their earnings. So things like telemedicine, things like genetic testing that does drug responsiveness, things like sort of facial diagnostics, they like because it means they can meet more patients and eliminate idle time. Insurance have been in the back seat of the car driving that, or not, well, in the back seat helping to steer it. And the other area, this is I think where we'll see the next explosion in the next 5 years, is payments. And I think I read recently, it might have been a McKinsey report, I think 90% of the shareholder value creation that's come out of fintech has been in payments, because most of the disruption has happened in payments, right? Anyone who's ever been to Shenzhen or Guangzhou recently, you try paying with cash, try paying with a credit card. You cannot, right? These are mobile wallet economies now. So consumers want to have different payment solutions. And if you look at sort of transactional intensive businesses like employee benefits and group medical, et cetera, this is a large driver of cost and customer inefficiency. So again, we spent a lot of time linking our claims engines to our payment engines. So instead of waiting for cash to go around the system from an insurer through a TPA to a client to a doctor within 60 days, it now goes in 6 minutes, right? That is genuinely transformational. 1, customers have certainty, and 2, doctors have cash, in their bank account a lot quicker. So I do think payments in personal lines businesses is going to be an area of massive adjacency for our sector.
Shannon, can I just want?
Yeah.
So not to be too pedantic, but I actually don't think. I think innovation is the job of the business leaders and not somebody else. So there's a fine difference between what I'm describing and what I see elsewhere, which is, I'm going to use one really simple example, right? So we write directors and officers insurance, executive liability, right? Our head of management liability basically went to our prompt engineering data science team and said, look, I want to do sentiment analysis around the following things extracted from the earnings calls and the Qs in the case. All right. Content, understood it, but understood the potential of, hey, large language models, GPT engines are really well suited for this kind of problem. Can you generate that stuff for me? That stuff comes from the experts, all right? The challenge is you need experts who are not only experts in their category, but you're forcing them to have the purview of what's happening in the external market so that they can bring those two things together. It is a fine difference, and I feel strongly about this. We've had great success as a company, that this is a model that is different and works, and maybe it's only right for us, but it is the one that I feel is sort of unique and different. And I think it's particularly well suited given the kind of environment that we're in today.
Yeah. So we just have a few minutes left. I want to talk now, maybe as a closing thought here, about the change management journey. What have you learned from it? We've talked about different models, more of the incubation lab, the hubs, versus innovation that is largely driven through the front line. We talked about partnerships with hubs and the business leaders. As you think about what's needed or what your experience has been translating innovation in terms of ideas through to impact, to actually scaling impact, what have you learned? Taryn, maybe we'll start with you.
Yeah, no, and I building on that, I think we have a very similar model. And actually, it's funny you mentioned D&O. We actually have done a lot of work with our Canada business around D&O. And I do think what we've learned is having a separate venture that's doing the work off to the side doesn't work. It needs to be in tight partnership with the business. So in an instance like that, right, the work is championed by the business. We work alongside those business experts, and we're almost acting as an extension of them. We have a very integrated team with them. And the benefit is, the reality is there are day-to-day realities of the business, and there's things that they need to be dealing with as they look out across the next year. We can help get things started so that when they're ready, it's ready to be picked up. But we have to work in very close partnership all along the way so that when they're ready, it is exactly what they intended. And they are the experts, and we believe that. And so we see ourselves as an extension of them, and we are just giving them the leverage to be able to focus on today, but also make sure they're not taking their eye off tomorrow.
Tim?
Yeah, I think, having been in this for a while, you do learn a lot of humility. And you learn on, what models work well, what models, don't work as well. I agree with Andrew, and actually everyone I think is in agreement here. And our evolution has been very similar, kind of the swing between what's the role of a center-led innovation effort versus business unit-led. And I absolutely 100% agree that it has to be not just the job of the business, but the job of every individual, that they've got to own innovation as a priority, and it's got to be focused into their efforts. I think what a center group can do, whether it's R&D or whether it's technology or whether it's a data science team or an innovation team, is serve as an accelerator or a lubricant for testing out some of these ideas in small scale. But again, being led from the experts from the business, this is the kind of problem I'm trying to solve. This is the idea. Help us form that idea. And then bringing that back and scaling it within the business. But you've got to have that side-by-side ownership of the problem, number one, and then of the viability and data behind what the proposed solution is once you're actually bringing it to scale. Otherwise, will not work.
Yeah, 4 quick things. I'd go back to a couple things I spoke about. OKRs for all. So everybody basically is accountable for, in this case, experimenting with the new technology, incorporating it into their business, into their individual roles. 2 is force visibility and competition across the businesses. Fear and greed has an amazing way to motivate people. So if they see somebody else that's doing something that's really interesting, it certainly becomes potentially the source of content, but it's also the source of competition. From the CEO or the senior executive's perspective, I hold back monies and effectively treat sort of the desires to do things as if it's venture capital. So we've backed 35 different investments inside of our businesses over the course of the last 4.5 years. I held back money to do that, and it's been a really effective way where the best ideas get funded. And the last thing is, look, we do a lot of stuff where we internally generate kind of version 1, but we don't want to be in the business of software. And so if we can find a commercial solution, so as soon as we get through version 1, we're lifting our heads up and saying, okay, who's out there that can help us scale and commercialize something without us being in the software business? And we've had great success, in certain areas. In other cases, there just isn't good answers out there. And we become the folks that are actually, building software and maintaining it.
Yeah, look, very quickly, I think Tim took my answer earlier, right? Focus on the problem, not the solution, right? I mean, we're very boring financial people, right? We get excited by debits and credits, assets and liabilities. So when a shiny new thing comes along, we're naturally tempted to say, well, this looks cool, let's invest in it or let's trial it, right? But fundamentally, the go, no-go decision on stage 1 has to be, what customer problem are we solving for? If we can't answer that, there is no solution relevant. And if I may, just because there's a quick question that flagged on screen that said, what non-insurance industries are ripe for partnership? I'd like to say that the answer, or my answer, is government, right? Government is ultimately the ultimate payer for resilience, right, of uncertainty, whether that's nat cats, whether that's public health care, whether that's aging demographics, et cetera, right? So when I was in India a couple of weeks ago, where the government and the Indian insurance regulator said, we want 100% insured population. And we want you guys in the private sector to deliver that. It's okay, cool, let's invest more in India, right? I mean, and that is genuinely an investment sort of decision now for us as a group, which is where do we see governments as partners to solving for things like healthcare, sustainability, things like retirement living, a third pillar pensions, et cetera. If we don't see governments making that partnership, we're not going to.
Thanks, Adam. Well, that is our time. I think we had a good, spirited conversation up here. Thank you for your time and attention, and thank you to our panelists.
Thank you.